Back in 2017, Tesla borrowed billions of dollars when it was a very speculative company who many people thought would go bankrupt. In fact, even Elon Musk himself thought the company would go bankrupt. They didn't, and the rest is history. But Tesla borrowed those billions of dollars at a rate of 5.3%. General Motors has just gone to market to borrow money. And the interesting thing is, no one has pointed out it's paying more for that debt than Tesla, a fully speculative company who everyone thought would go bankrupt back in 2017, paid for its debt 5 years ago. Frankly, the market doesn't have a whole lot of confidence in GM paying back that money. That's what this indicates. Hello my friends, welcome to the channel. I'm the Electric Viking. Great to see you. Thank you for subscribing and great to see the new subscribers to the channel. Now for those of you wondering, do I think GM will go bankrupt? Well, considering the US government's recent move to give General Motors an additional $2.5 billion loan, I'd say it's more than likely that they will be bailed out. If that is necessary, will it be necessary? Probably. To the tune of how many billions? I don't know. But let's have a look at the financials. Let's have a look at what everyone is ignoring. Why? Because it's actually very confusing to assess the financials of Tesla and the financials of General Motors. The companies are so different and their balance sheets and their strategy of raising money is so different that it's quite confusing. But one thing does stand out. That is, right now, the recent debt borrowed by General Motors, or the cash borrowed by General Motors, was raised in an interesting way. GM has a very fancy marketing team who like to call things fancy things like Ultium, Ultium battery packs, Ultium, you know, they give things a name, they package them up with a little bow and make them sound really good. Now about 5 weeks ago, General Motors announced plans to issue 2 debt instruments in the form of 2 series of unsecured fixed rate notes, collectively worth $2.25 billion. The newly issued GM unsecured notes are comprised of $1 billion of 5.4% notes due in 2029 and $1.25 billion of 5.6% notes due in 2030. What does that mean? Well, basically GM is paying 5.4% interest on $1 billion and 5.6% interest on the other $1.25 billion. Now, considering GM's current cash position, as of June 2022, GM has $31.6 billion in cash reserves. I mean, of course, you need to consider the fact that they also have total liabilities of $178.9 billion and total debt of $111 billion, but still, they do have a lot of cash on hand. So why is the market giving them, well, what seems to be fairly high rates, at least at the time when they issued this offering, in comparison to when Tesla borrowed money back in 2017. Now, Tesla borrowed it at 5.3%. GM is saying they're going to be paying between 5.4 and 5.6%. Now, you're probably thinking it's not a big deal, but actually, if you think about it, there was a huge amount of risks that should have been priced into Tesla's borrowing back in 2017 when the company, frankly, was just losing billions of dollars and really had no way that anyone could see at the time of them actually making a profit and even paying that debt back. Now, GM has called this loan a pretty little name. It's called green bonds that will power their clean transportation investments. And they claim that those $2.25 billion of senior unsecured notes will finance their clean transportation strategy. Clean transportation strategy, it's just another way of saying, well, we need to do a lot. We need to invest a lot of money into building factories and battery plants and basically changing our business from an internal combustion engine business to a new battery electric car business. Now, it's true. GM has committed to ramp its investments in electrified mobility, announcing plans last year to invest $35 billion in its EV and AV strategy between 2020 and 2025. At its Investor Day last year, The company outlined the anticipated opportunity from its electric vehicle initiative, with EV sales expected to hit 1 million units by 2025, which is optimistic considering where they're at this year, and EV revenue forecast to grow to 90 billion in 2030. Now, I'm very aware that there's a large number of people who watch this channel who hate it when I criticize General Motors or when I just point out reality. The reality here is that, yes, Mary Barra is doing something which we would call fairly spruiking. She is trying to spruik the valuation of General Motors in order for GM to get more funding or more cash at a lower rate. And it's not really working, at least so far this year. The market's confidence in General Motors and its ability to pay back this debt appears to have decreased compared to about the same time last year. Why? Well, strategic intelligent investors are very well aware that Mary Barra claimed right now General Motors would be selling 17 different electrified car models, not 17 cars, as some of you have joked, but 17 models by the end of October. Now, General Motors has, 7 weeks to make that happen? And I don't think there's any chance of them coming close. In other words, what does that mean? Well, the market is pricing in the fact that nobody believes what Mary Barra says anymore. That's the true fact. Unfortunately, I'm here to tell you. Now, this does not mean General Motors will fail. It doesn't mean their new Ultium battery packs aren't good. It doesn't mean their new Silverado won't be good. I think they will all be very, very good. It means the market is sick of General Motors talking, in particular Mary Barra talking, making huge promises and not delivering. Is it really realistic for GM to deliver 1 million EVs in 2025 when they only delivered 7,000 in the second quarter of 2022? What does that mean? They're on pace to deliver maybe 30,000 this year. In other words, Mary Barra is saying, market, please believe us. We're telling you the truth. Don't worry. We're going to deliver 30,000 EVs this year. But in only a space of 2 years' time, we'll go from 30,000 to 1 million. Is that really believable? Well, you'd have to be the most hardened, dyed-in-the-wool, extreme General Motors fan to be believing this kind of marketing rhetoric. I'd say it aligns something with what people say about Tesla fans. They say they're drinking the Kool-Aid. If you're believing this from Mary Barra, you're drinking the Kool-Aid. So, back in 2020, General Motors released their strategy. They said they'll borrow as much cash as they possibly can and keep as much cash on hand as they possibly can in an effort to be able to invest as much as they possibly can or spend as much as they can into transforming their company to making EVs. So in the past 6 weeks, we have learnt that GM has borrowed around $5 billion. Now that includes the $2.5 billion or nearly $2.5 billion of convertible notes and the US Department of Energy's loan. Now the US Department of Energy is reviving an old loan program, and its first recipient is the joint venture between General Motors and LG Energy Solutions. Now LG Energy Solutions, I should point out, is a South Korean company. So yes, the United States government is giving a lot of money or loaning a lot of money to a South Korean company. Yeah, sure, it's a joint venture between GM, but still, half of that joint venture is owned by South Korea. Now, the $2.5 billion loan issued to GM and LG Energy will be used to help finance the construction of new lithium-ion battery cell manufacturing facilities. But more importantly, those facilities are in the US. I have no problems with that loan whatsoever personally, but I want to know what you think about it in the comment section below. And the loan to Ultium Cells, the name of the GM-LG joint venture, is expected to close in the coming months and will be used for its upcoming facilities in Ohio, which just opened, Tennessee, and Michigan. GM and LG have plans to invest more than $7 billion to jointly build these 3 battery plants. Production at the Ohio factory has begun, apparently about a week ago. In Tennessee, production is scheduled for late 2023, and in Michigan, for 2024. So what is GM using the $2.25 billion in new senior unsecured notes for? Here's what it said. In a press release, GM stated it intends to use the net proceeds from the sale of the notes to finance or refinance in whole or in part eligible projects described in GM's Sustainable Finance Framework. The offering settled on the 2nd of August 2022. Basically, GM's saying, Well, we're using it to invest in our sustainable finance framework. Now, personally, I just think, why not just say straight up what it is? Stop using marketing jargon. Just say, we're investing in building more electric cars. Now, I think it's important to consider that this announcement pertaining to issuance of the notes came right after GM's Q2 2022 earnings, which were headlined by $1.7 billion in income on $35.8 billion in revenue. Compared to the second quarter of 2021, the results represented a 40% downturn in income and a 4.7% uptick in revenue on higher corporate expenses, primarily due to year-over-year mark-to-market changes. Now, speaking of corporate expenses, Mary Barra is one of the highest paid CEOs in the world. GM's corporate team, well, I made a video about their salaries. Most of them have doubled in the space of 12 months based on so-called performance improvements. Really, all their executives, have they really performed well enough in order to double their salaries? I'm not convinced. We're talking hundreds of millions of dollars per year for just a small number of executives here. Now, for those of you who are not financially familiar or intricately familiar with the financial lingo that I'm using here, an unsecured note is similar to a bond, but are backed by only a promise to pay. This makes this kind of security more speculative and therefore riskier than other types of bond investments. The upside, however, is that unsecured notes offer higher interest rates than secured notes or debentures, which are backed by insurance policies in case the borrower ends up defaulting on the loan. In other words, there's no insurance policy on this loan. You want to invest in this, you get a higher return, 5.6%, but there's a lot more risk. So the question is, why is GM raising money with more risk to investors? Why do they need to do this in a way that is speculative? Now, GM's second quarter 2022 earnings reported that the automaker has $16.115 billion in long-term debt for its automotive business, which is part of $83.2 billion in total liabilities, also for the automotive side of the business, and that compares to $131.8 billion in total assets assigned to GM's automotive business. The thing is, those assets, right, what do they do right now? They produce internal combustion engine vehicles. Sure, some of them will be used in GM's new electric future, but a lot of them will have to be written off. The key question is, how much of that will be written off? And how much of it will they be able to use? Nobody seems to know. Now, it's worth mentioning that GM's net cash flow for the quarter ending June 30, 2022 was minus $3.827 billion. That's a 191% decline year over year. The debt raising by GM was given a rating by Fitch called BBB-. Here is what Fitch say about that. BB ratings indicate an elevated vulnerability to default risk, particularly in the event of adverse changes in business or economic conditions over time. However, business or financial flexibility exists that supports the servicing of financial commitments. Now, I personally think that part does apply to General Motors. Business or financial flexibility exists that support the servicing of financial commitments. Who is that flexibility that I'm talking about? Well, it's the US government. I think we all know what will happen if those bonds can't be paid back at that 5.6% interest. The government will step in and provide another loan. Well, at least that's my prediction. Let me know what you think in the comment section below. Thank you for watching. Bye-bye.